Welcome to TheoTrade. This is Don Kaufman. Here we are. It is June 14th, 2017. You were watching the Theo Night video. Let's kick it off here. We've got about a minute left to trade in the session. And I want to start with, first and foremost, yes, Janet Yellen and the Fed came out today. They raised interest rates. No big surprise over there, right? There was a 99% chance they were ultimately going to do that. So they raised interest rates. The interesting thing comes in the fact that the bonds rallied pretty much out of the gate this morning. But I want to just zoom in here to the ZB in some recent trades. So all the discussion of raising interest rates, where do you see that in the bonds? Now, for those of you that are a little bit newer, might not necessarily understand or trade the bond products on a day-to-day basis, as the bonds rally or as the notes rally, what's the difference? Okay, the bonds are the 30-year U.S. bond treasury futures. The notes, which is the ZN, happen to relate to the 10-year treasury notes. They have been doing nothing but rallying. And of course, as these products rally, they inevitably take interest rates down. So now what we're going to look at is what they call TNX, which is the 10-year Treasury Index. Hey, from this point of view over here, there's nothing but downside. And again, to clarify, if you've never looked at the TNX before, right here where it says 21.38, it's a little bit confusing. What this actually alludes to is a 2.138%, all right, associated with the 10-year right now. And again, that's the 10-year notes. So again, the Fed is talking about nothing more. There's the closing bell. The Fed is discussing nothing more than raising interest rates. However, the marketplace has decided to do the exact opposing. The interesting thing inside of today's move in the bonds, so the bonds explode higher, it puts pressure on interest rates. And as it starts to put pressure on interest rates, wouldn't you think that that would injure, okay, what we're seeing inside of the XLF? And again, I want to be very, very specific. We're not even going to look at the chart first. We're actually going to go look at the XLF in the trade tab over here. The XLF ends up on the day, okay? And you have to question this move. So we've had kind of this breakout move in 1, 2, 3, 4 trading sessions. Again, today there was sell side activity initially inside of the XLF, and I'll go to the intraday chart. The XLF was selling off all the way back down to the 24 level before it exploded back to 24.50. And again, back to the 9-month chart over here, the XLF having stellar and breakout day. What do these financials seem to know that the bonds don't? Okay, think about how precarious and how fragile a market happens to be when you have interest rates going down substantially, mind you, and yet the financials are rallying in the face of that. Now, of course, people can point out Dodd-Frank is going to be repealed. They're going to replace it, repeal, replace. I've heard it all before. That was priced in back here during the election. The second that the election happened, they priced all of the upside in. They're going to repeal Dodd-Frank. It's all upside, nothing but upside for the banks out there. Nevertheless, okay, interest rates are not helping the banks at this point in time. They're doing nothing but going down, yet the banks are exploding to the upside. Okay, opportunity, I think so. I think there's a pretty good opportunity to come in here to short the XLF. Now, to continue on from that one, how could you short the XLF? Sure, you could use an in-out spread, but this trade may not just, proceed overnight. And I think what a lot of people are going to have to recognize is you may have to go out and hold this type of a position for a period of time. What I'm actually using is in-the-money options, and you might want to consider the same. I'm just buying in-the-money puts. And the reason that I'm buying in-the-money puts, suffice to say, there's a lot of things you could do, right? You could short the XLF. The reason that I choose to use in-the-money puts is that the in-the-money puts, first of all, you could use, right here, and I've got one position in here in the 26 puts. In these 26 puts, it limits my risk to about $1.80, but it's giving me 76 cents, and this is the delta, 76 cents, all right, ultimately for every dollar move in the XLF. It's a lot of bang for the $1.80 of risk in there. If you want, full bang for your buck, you can not only limit your risk, but you can limit the capital outlay. If you go out there and just short the outright XLF, you're going to have a lot of capital, big stake in there, okay? Nevertheless, in this particular circumstance, we're effectively and synthetically shorting the XLF. You can also do it inside of an IRA. Just buy the in-the-money puts. There's very little decay, and I'm pointing to the 27s because these are probably the most appropriate at the time. They're trading for about $2.65, so it gives you a short position for the next 93 days. And again, I want to kind of highlight this. You'd be in it for the next 93 days. You'd be taking a short position, never sustaining more, okay, than about $2, and we'll call it 66 cents of risk, because I think that would be a fair price in here. It could be done in an IRA, and again, you'd be buying these puts, and it gives you almost 90 cents bang for the buck movement to the XLF. And again, you're going to lose $2.66. The only way you can lose the full 266, though, is if you fell asleep at the wheel. Okay, the XLF shot from 24 above, okay, 27, and we were at September expiration there. Could you lose it? Yeah, if the market explodes to the upside. But it's a nice trade idea, and this is much more of a duration position, okay, that I actually intend to hold even beyond 93 days. What I'll do is I'll actually take the position, even if it's deep in the money, and I'll roll it out. Okay, another area that I really want to discuss in today's marketplace, the Nasdaq. The only way to describe the Nasdaq in some recent trading sessions would be fragile. I cannot stress this enough. The Nasdaq throughout this morning has been throwing off. And this morning, before we saw any of the decline, the Nasdaq is throwing off some wild signals in here. We were getting, these large unforeseen moves, 6, 7, 8 point Nasdaq moves on a 1 minute candle, and it came ultimately out of nowhere. Sure enough, the Nasdaq tanks a bit. It does rally back. It is a fairly dire warning that I give you inside of Nasdaq, and the reason I give you a fairly dire warning is throughout today's trading session, okay, we did not have Apple rally at all. So Apple was not helping the Nasdaq in any way, shape, or form. It was actually a drag on the Nasdaq, and that was early on in the trading session, okay? Microsoft, similar. It was relatively flat, slightly up before fading heavily with the rest of the Nasdaq. But please, look at some of these moves, okay? If you don't want to believe me, it's fine. I'm giving you a fairly dire warning from where I sit. This is Microsoft. It's one of the largest market caps, okay, in the entire marketplace. When a product moves from 70, okay, and it drops 50, 60 cents in a 3-minute window, do you realize how many billions of dollars of market cap? Again, think about how many shares are outstanding. There's almost 8 billion shares. 8 billion shares, okay, are almost outstanding. Specifically, here is 7.7 billion shares are outstanding. For a product to move 50 cents, do some quick math, that just lost $4 billion of market cap inside of what? A few seconds? And people are just not respecting some of the moves that you're seeing on the screen over here, okay? The market is giving you a dire warning. There's no bid. When volatility starts to hit, there's no bid. Now, I'm not going to sit here and I'm not going to argue, that the Nasdaq can't rally. Of course, the Nasdaq is capable of rallying. It has been rallying. The unfortunate circumstances, though, okay, when we start to look at individual stocks like a Microsoft on an intraday basis, if we start to sell off, there won't be any dip buyers coming in, okay? The marketplace may not have any bidders, and we could see a incredible down day in many of the Nasdaq products. So I point out again today, the interesting thing is early in the trading day, Microsoft was not performing well. Apple was, totally under duress early in the day. Facebook was actually performing very well. Okay, Facebook was up, all right, at portions of the day before fading. Google happened to actually be up early in the day, and Amazon happened to be up. And then there were 3. You know, it's interesting because a week ago, I'm talking about 5 products that are driving the entire marketplace. Yeah, well, guess what? Now we're down to Facebook, Google, okay, Amazon, and they're weak. And if you take a look at the 5 products that we've been looking at day in and day out, they're displaying, again, very odd amounts of volatility. And I'll defer once again back to the Nasdaq. The Nasdaq, okay, all the risk right now is to the downside. And it's moves like this that really keep us a little bit at bay. And if you're not seeing this, this just happens to be a 1-minute chart. And it should intimidate you when a product trades from, 57.12, and this is a 1-minute candle, again, to 56, all right, 98. When you're seeing, 10, 14-point moves, something's up. Earlier, we actually saw, in the week, we actually saw a 30-point move inside of the Nasdaq inside of 1 minute. That's within the last 5 trading sessions. So the Nasdaq, again, day in and day out, I'll bring up on a 30-day, okay, is throwing off wild signs of volatility. We're retesting earlier today some of the lows that we saw from Monday and some of the lows, of course, that we saw on Friday. It would not surprise me, okay, to see a rally and break inside of the Nasdaq again, and to see a very, very substantial drop. It's a fairly dire warning I'm giving inside of the Nasdaq. Make no two ways about it. Can it rally up? Yeah, but the days appear to be numbered inside of the Nasdaq product out there. So some interesting trades to think about. Number 1, in the XLF, taking a little bit of a duration position, and number 2, kind of a dire warning. If you're in the Nasdaq stocks over there, okay, are you going to find a seat when the music stops? Do you really think you're going to be able to get out of these products fast enough if the market starts to sell off? Okay, today was a perfect indication. There's not a chance. There's no bidders. There's no buyers when this market starts to sell off. Thanks for everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.